Hey everyone, and welcome back to Investing Talk Podcast. We're diving into a company that's been making some serious waves in the stock market, and that's Kaival
Oh,
Brands.
yeah, ticker symbol KAVL.
That's right, KAVL. Now, if you thought a roller coaster was a wild ride, just wait till you hear about this stock's journey.
I'm ready.
We're talking a 52-week low of 43 cents, a single-day peak of $5.06, and a recent close at 94 cents.
Wow, that's quite a ride.
Yeah, it's a fascinating case. Much of this volatility stems from recent events, including a proposed merger and key partnerships that have investors buzzing.
Some with excitement, others with caution, I imagine.
Absolutely. Let's break it down, starting with the merger. KAVL announced a massive $301 million merger with Delta Corp Holdings.
Back in September 2024, wasn't it?
Yep, September 2024, and they officially filed for it in January of this year. Delta, for those unfamiliar, is a logistics company. This means the merger marks a significant shift for KAVL, which is primarily known for its electronic nicotine delivery system, the Bidi Stick.
This raises a critical question for investors. Is this merger a savvy diversification tactic, or is KAVL straying too far from its core competency? Remember, this deal would leave KAVL shareholders with just 10.3% of the combined company.
Wow.
That's a pretty substantial dilution of ownership. It's no surprise that several law firms have launched investigations to determine if this deal is truly in the best interest of KAVL shareholders.
Some analysts are already suggesting it might not be.
Right, and that uncertainty plays directly into the stock's wild price swings. Remember that 138.3% surge the day the merger was announced?
Textbook volatility.
Exactly, but here's where things get even more interesting. KAVL is what's known as a penny stock, meaning it trades for a very low price per share.
Right.
What's more, it has an incredibly low float, less than 1 million shares available for trading. This makes it extremely susceptible to dramatic price movements based on news, speculation, and even just plain old trading volume.
To illustrate this point, let's rewind to June 2024. The stock skyrocketed a mind-boggling 286% in just one day. And guess what? There was absolutely no major news driving that surge. It was pure trading volume, pure speculation. So you can see why KAVL is a stock that definitely keeps you on your toes.
You said it. Mergers and volatility aside, let's talk about KAVL's actual business performance. They have this partnership with Philip Morris, which sounds pretty impressive on paper.
Right.
Is that translating into big wins financially?
The Philip Morris partnership certainly holds promise, especially for global expansion and potential royalty revenue. But when we look at KAVL's earnings, the picture isn't quite as rosy. Their earnings haven't been great, to put it mildly. They reported a net loss of $1.57 million back in July 2024, and their revenue has been on a downward trend year over year. So while the Philip Morris partnership has potential, it hasn't been a financial savior for KAVL just yet.
So not exactly a cash cow at the moment, but what about the overall industry? Is the electronic nicotine delivery market booming? Could that be the tide that lifts KAVL's boat, so to speak?
It's a rapidly growing market, no doubt about it. Some projections estimate it will reach a staggering $168 billion by 2030. However, here's the catch.
Oh boy.
Regulations. The vaping industry faces intense scrutiny, and any new restrictions, especially on flavors, could have a substantial impact on KAVL's bottom line. While they claim to have tamper-resistant and medical-grade products, regulatory headwinds could still blow them off course.
Okay, so the industry outlook is a bit of a gamble then. Let's bring in some technical analysis. What can the charts tell us about KAVL's potential trajectory? We know our listeners love this stuff.
Moving averages, RSI support, and resistance levels break it all down for us.
Okay, from a technical standpoint, KAVL is painting an interesting picture. The 50-day moving average recently crossed above the 200-day moving average. This is known as a golden cross and is often viewed as a bullish signal. However, this particular golden cross appears to be losing steam, with the price now dipping below the 50-day moving average. That could suggest some short-term weakness is brewing.
So, mixed signals there. What about the relative strength index? Is it flashing any warning signs?
The RSL is currently sitting comfortably in neutral territory, hovering around the 40 to 50 range. This tells us that the stock is neither overbought nor oversold. Essentially, it's taking a breather after its recent bouts of volatility. We'll need to keep an eye on it, though.
All right, so we've covered a lot. Mergers, volatility, earnings, industry trends, and even some technical analysis. So a lot to digest, but this is Investing Talk Podcast. After all, we're here to help you make sense of it all. For someone considering investing in KAVL, what does it all add up to?
That's the million-dollar question, isn't it? KAVL presents a classic case of high risk, high reward. To help navigate this complex landscape, let's break down some potential investment approaches. Let's start with what we might call the short-term momentum play. This approach involves buying KAVL on dips, ideally when there's strong trading volume, with the aim of riding the wave of volatility back up to previous highs. However, the strategy is definitely not for the faint of heart. It requires nerves of steel, a high risk tolerance, and a quick trigger finger. Those gains can evaporate just as quickly as they appear.
Got it. So not for those who prefer a leisurely stroll through the stock market. What's the next option?
Next, we have the long-term speculative bet. This is for investors who see the potential in the Delta Corp merger and believe in the long-term growth of the vaping market, even with the regulatory challenges. It's a high-risk, high-reward scenario where you're essentially betting on KAVL figuring out its profitability puzzle while the vaping industry as a whole successfully navigates the regulatory maze.
Okay, so a long game with potentially big payouts, but definitely not without its fair share of uncertainty. What's the final approach we should consider?
The last one is what some might call the dip buying opportunity. This involves purchasing KAVL during market corrections, capitalizing on its historical tendency to bounce back from lows. This strategy requires patience, discipline, and a close eye on the company's fundamentals. You're essentially hoping for a turnaround in their financial performance, betting that the dips are temporary setbacks rather than signs of a sinking ship.
Three distinct approaches, each with its own set of risks and potential rewards. But before anyone rushes to hit the buy or sell button on KAVL, we need to address the elephant in the room, the risks.
Absolutely. Let's be crystal clear here. The risks associated with investing in KAVL are substantial. We're talking consistent losses, declining revenue, and a regulatory environment that could shift dramatically with the stroke of a pen.
Those are some serious red flags. And let's not forget the pump and dump vibes we're getting from all the social media hype surrounding AAVL.
Exactly. While there is some institutional investment, the lack of significant insider buying raises a legitimate concern. It's crucial to remember that social media trends can be fleeting and often don't accurately reflect a company's underlying health.
So let's dive deeper into those technical details we teased earlier. Give us the insights from the charts, moving averages, RSI, the works.
Looking at KAVL's recent price movements, we see a support level forming around 0.90 cents to $1. This means the stock has shown a tendency to bounce back from this price area on multiple occasions.
Interesting. So that's like a safety net of sorts, indicating that buyers are stepping in and preventing further downside.
You could say that. However, there's also a resistance level forming around $1 to $1.10 side. KAVL has made several attempts to break through the ceiling but hasn't been able to hold on to those gains. This suggests that sellers are becoming active around that price point, creating downward pressure.
So we've got this support zone and this resistance zone. It sounds like KAVL is caught in a bit of a tug of war. What does that tell us about the overall trend?
Well, the golden cross we discussed earlier, where the 50-day moving average crossed above the 200-day moving average, is starting to lose its luster. The 50-day moving average has now dipped below the 200-day moving average, which could be a bearish signal. It suggests that the short-term momentum might be waning.
Not exactly a clear direction then. More like a waiting game.
For now, yes, it's more of a sideways pattern with the stock consolidating between these support and resistance levels. We need to see the decisive break above $1 intentions with strong volume to confirm a bullish trend reversal.
You mentioned volume earlier. Remind us why it's so important for KAVL.
Absolutely. If you look back at the charts, you'll notice that the massive surges in June and September 2024 were accompanied by significant spikes in trading volume. This tells us that those moves were driven by a surge in buying interest, likely fueled by speculation and hype surrounding the company. So volume is a key indicator to watch, especially for those who are considering the short-term momentum play.
So volume speaks volumes, as they say. But what about the RSI, the Relative Strength Index? Where does that stand right now?
The RSI is currently hovering around the 40 to 50 range, indicating a neutral stance. It's neither overbought nor oversold. Essentially, it's suggesting that the stock is taking a breather after its recent volatile swings. We don't have a clear buy or sell signal from the RSI at this point.
Okay, so wrapping up the technical analysis, it seems like KAVL is at a crossroads stuck between these support and resistance levels. What should investors be watching for in the coming days and weeks?
I'd say the key things to watch are volume, price action around those key support and resistance levels, and any news catalyst that could potentially trigger a breakout or breakdown.
Right, things like updates on the Delta Corp merger or any new developments in the regulatory landscape for the vaping industry, those could definitely inject some volatility back into KAVL and create trading opportunity.
Exactly. Now let's take a step back and talk about the bigger picture. KAVL is operating in the electronic nicotine delivery systems market, which, as we mentioned earlier, is projected to grow significantly in the coming years, but it's also facing some serious headwinds.
That's a great point. It's a market with a lot of potential, but also plenty of challenges. Let's break down those factors that could impact KAVL's future. What are the potential tailwinds and headwinds investors need to be aware of?
On the positive side, we have the continued growth of the vaping market itself. As more and more smokers switch to alternatives, companies like KAVL stand to benefit, and their partnership with Philip Morris could give them a leg up in terms of distribution and global reach.
That Philip Morris partnership is a definite wild card. Could that be a game changer for KAVL?
It has that potential. If leveraged effectively, it could give KAVL access to Philip Morris's vast distribution network and marketing expertise. However, as we've seen, partnerships alone don't guarantee success.
And what about the Delta Corp merger? Could that be the catalyst that transforms KAVL?
It's certainly possible. If the merger goes through as planned, it could give KAVL access to Delta Corp's logistics and supply chain capabilities, potentially streamlining their operations and improving profitability. However, remember those concerns about shareholder dilution and whether the merger will truly benefit KAVL in the long run.
So there's potential for significant upside, but also plenty of risks. What are some of the headwinds that could derail KAVL's growth story?
Regulation is a major concern. The vaping industry is under constant scrutiny, and any new restrictions on flavors, marketing, or sales could have a substantial impact on KAVL's revenue.
And given KAVL's volatility, even the rumor of new regulations could send the stock tumbling. What about competition? The vaping market is getting increasingly crowded. How does KAVL stack up?
That's a key question. There are a lot of players vying for market share, and KAVL needs to differentiate itself to stay ahead of the curve. Do they have a unique selling proposition? Can they compete on price or innovation? These are questions investors need to consider.
And then, of course, we have KAVL's financial performance, which, as we discussed earlier, has been less than stellar. Can they turn things around?
That's the million-dollar question. They need to demonstrate that they can achieve sustainable profitability. If they can't, investors may lose confidence and the stock could suffer.
So it's a mixed bag, to say the least. Lots of potential, but also plenty of risks. Before we move on, I want to circle back to something we touched on earlier. Social media hype. KAVL has been a hot topic on platforms like X, and there's been a lot of chatter about the stock.
That's true. Social media can be a powerful force in the market these days, but it's important for investors to remember that not everything they read online is accurate or reliable.
Exactly. It's crucial to do your own research and not get caught up in the hype. Just because a stock is trending on X doesn't mean it's a good investment.
Well said. Investors need to approach social media with a healthy dose of skepticism and rely on solid research and analysis to inform their decisions.
So where does this leave us? What's the bottom line for investors who are considering KAVL?
KAVL is a speculative play with high risk and high potential reward. It's a volatile stock that can move sharply in either direction, especially on news events.
So definitely not for the faint of heart.
Precisely. This is a stock for investors who are comfortable with risk, have a strong understanding of the market, and are willing to do their own research.
All right, so we've covered a lot of ground here today. We've discussed KAVL's recent price action, potential investment strategies, technical analysis, the industry outlook, and the risks and potential rewards.
And we've also talked about the importance of being aware of social media hype and doing your own research.
All in all, it's been a fascinating deep dive into the world of KAVL. But before we wrap things up, I want to leave our listeners with a thought-provoking question.
Please do.
Will Kaival Brands successfully navigate these challenges and emerge as a leader in the ENDS market? Or will its volatile journey end in a disappointing fizzle?
That's the million-dollar question. Only time will tell. But one thing is for sure, it's going to be an interesting ride.
Indeed it is. So there you have it, folks. Our take on Kaival Brands KAVL. We hope you found this episode informative and insightful.
And always, we encourage you to do your own research and make informed investment decisions.
And if you enjoyed this episode, don't forget to subscribe to Investing Talk Podcast, share it with your friends, and leave us a comment.
We appreciate your support.
Until next time, happy investing. Welcome back to Investing Talk Podcast. We've been analyzing Kaival Brands.
Ticker symbol KAVL.
That's right, KAVL.
And it has been quite a journey.
It really has been. We've explored their merger with Delta Corp.
Right.
We've dissected their volatile stock price, and we've delved into the complexities of the electronic nicotine delivery systems market.
Absolutely. But beyond the specifics of KAVL, I think there are some broader lessons here for investors.
Oh, absolutely. KAVL's story offers, valuable insights into market dynamics, risk assessment, and the importance of due diligence.
Yeah, let's start with the big one, the inherent risk of penny stocks.
Right.
KAVL's wild price swings serve as a stark reminder that these investments are not for the faint of heart.
Exactly.
Penny stocks are often associated with companies that are either in their early stages of development or facing, significant financial challenges. This translates into a higher probability of things not going according to plan.
And as we've seen with KAVL, even positive news like a merger announcement can be met with intense volatility.
Right, that's because penny stocks are highly susceptible to speculation and hype. Investors need to be prepared for a roller coaster ride and have a clear understanding of the risks involved.
So before jumping into the world of penny stocks, it's crucial to do your homework, understand the company's fundamentals,
Yeah.
its financial health, and the competitive landscape it operates in.
Absolutely, and be realistic about the potential downsides. Don't get blinded by the allure of quick gains.
Right.
Remember, high rewards often come with high risks.
KAVL also highlights the power of news and events. We saw how the stock reacted to the merger announcement and the partnership with Philip Morris.
Right, these catalysts can create significant momentum, both positive and negative. Investors need to stay informed about upcoming events and anticipate how they might impact a stock's trajectory.
And they need to be prepared to act decisively when necessary. Because in the fast-paced world of penny stocks, opportunities can appear and disappear in the blink of an eye.
Right, another crucial takeaway from KAVL is the importance of not falling prey to social media hype. We've discussed this before, but it's worth reiterating.
Social media can be a breeding ground for misinformation and manipulation. It's easy to get swept up in the excitement and make impulsive decisions based on what you see trending online.
Investors need to approach social media with a healthy dose of skepticism. Rely on reputable sources, conduct thorough research, and never let social media dictate your investment strategy.
Now let's shift gears and talk about KAVL's industry. The electronic nicotine delivery systems market is a fascinating one. It's rapidly evolving with tremendous growth potential.
But it's also facing its fair share of challenges, particularly in the realm of regulation. Any new restrictions on flavors, marketing, or sales could significantly impact companies like KAVL.
And there's always the possibility of new technologies or products emerging that could disrupt the market.
So it's an industry that demands constant vigilance. Investors need to stay informed about regulatory developments and technological advancements.
And speaking of innovation, KAVL's merger with Delta Corp is an interesting case study.
Yeah.
It's a bold move, a strategic attempt to diversify and strengthen their position in the market.
Whether it will be successful remains to be seen, but it underscores the importance of strategic partnerships and the willingness to adapt to a changing landscape.
So we've come full circle. We began by analyzing KAVL's specific story, and we've now zoomed out to examine the broader market and industry implications.
It's been an enlightening exploration of risk, reward, and the ever-changing dynamics of the investment world.
Absolutely. We hope this episode has provided valuable insights for our listeners. As always, we encourage you to do your own research and make informed investment decisions.
And if you've enjoyed this episode of Investing Talk Podcast, we encourage you to subscribe, share it with your friends, and leave us a comment.
We appreciate your support and look forward to diving into more fascinating investment stories with you in the future.
Until next time, happy investing.